Hey everyone, and welcome back to another video for today. So since the last time I spoke about Opendoor, a lot of things has happened with the stock. With the company also, some crucial things have already happened. Now, earnings report, that's going to be in the next couple of days, August 5th. So make sure you're subscribed and hit that notification bell so you don't miss any of the future videos and live streams. So what should we be expecting from the upcoming earnings report? Well, we could, of course, just go and look at what the market is expecting this company to report on August 5th. Revenue, $1.5 billion. EPS coming in at, well, a loss of 3 cents right now. And then EBITDA. That's going to be the number to look at because that's supposed to be positive. The estimated number, the expected number, sits at $17.5 million for the quarter. And if we go back here and look at what the management has told us last quarter for a guidance, they told us the following thing. The company anticipates that the slowdown in acquisitions will put pressure on top-line revenue in the back half of the year, so probably in the guidance for Q3 and Q4, with revenue expected to decline year over year in Q3 and Q4. However, they aim to deliver year-over-year contribution margin improvement through continued operating efficiencies and wider spreads. They also expect an improved and adjusted net losses in 2025 compared to last year. Company's guidance for Q2 is revenue between $1.45 and $1.52 billion, contribution profit between $65 to $75 million, adjusted EBITDA of between $10 to $20 million, so 15 at the midpoint. Market is expecting a little bit more than that, and that's the first time in 3 years that that's going to be adjusted EBITDA positive for a quarter. Now, as you can see, the stock is still above $1, and that was very crucial, and I'll explain why. If you enjoy this type of videos, hit all the buttons. If you want more of me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, first of all, if we look here at the mortgage rates, of course, if we look at the 5-year performance, you can see what has happened, right? But more recently, we have been coming down a little bit. We're looking here at a 30-year fixed for purchases. For refinancing, it's a little bit of the same. You can even see here for the week July 27, top offers on bank rate are 0.88% lower than the national average. You can also see that it does come down a little bit. For repurchasing, it has actually also come down a tiny bit for the national average. So that's good. What's also good, based on the recent revised economic data that we have, because yes, believe it or not, in 2025, you cannot just release data and stick with it. No, you can actually release economic data and then a couple of weeks later, you come back and say, oh, actually, no, that data wasn't really that accurate. We are revising it down in this case. And so what we're seeing here, probabilities of a rate cut for September is now at 80.3%. If we look back to a week ago, that was 61.9%. Now, if we go and look at the December meeting, we can see a huge increase here, a huge change. Of course, if we do get a September rate, then yeah, only 11.7% do expect what probability is that we're only going to get one cut. 40.8% 2 cuts, 46.4% now 3 cuts. And if we look at what that was not that long ago, right, at this part right here, which is this line, a week ago, that stood at 20.1%. And as you know, the lower the interest rates, the better it will be for a company like Opendoor. Moving on here, more company-specific news. So this was released on July 28th. So Opendoor to adjourn special meeting to stockholders to August 27. Remember, this was a meeting that was bound to happen July 28th. They postponed it until August 27. In that meeting, they were going to talk about, well, the reverse split, the potential reverse split. And as I said before, just because you vote for a reverse split doesn't mean that the stock will get split. It just gives them the option. And then it's up to them to decide what's best for the stock and for shareholders. Well, here they said the special meeting was being held to consider 2 proposals related to discretionary reverse stock split of the company's common stock Approval of the proposals does not mean that a reverse stock split will occur. Rather, an approval would provide the company's board of directors with an option to pursue a reverse split only if the board believes it is in the best interest of Opendoor and its stockholders, which includes seeking to ensure that Opendoor remains listed on the Nasdaq. And so, on Friday, Opendoor regains compliance with Nasdaq minimum bid price requirement and cancels special meeting for stockholders. So of course, if you are staying above $1 for at least 10 consecutive business days, you are now compliant. And that's exactly what has happened. So Nasdaq's notice confirmed that Opendoor maintained a closing bid price of at least $1 for 12 consecutive business days from July 15 to July 30, thereby regaining compliance with the minimum bid price requirement. Accordingly, Nasdaq has determined that the matter is now closed. More importantly, the board of directors of the company has decided to cancel the special meeting of stockholders scheduled for August 27, which was intended to consider two proposals related to a discretionary reverse stock split of the company's common stock. In light of Opendoor regaining compliance with the minimum bid price requirement, the board has determined that it is the best interest of the company and its stockholders to not proceed with the reverse stock split proposal at this time and to cancel the special meeting. Which some might speculate and say that, oh, this maybe is a sign of them being quite confident that the report, the upcoming earnings report, is going to be good enough and should not crash the stock. Although you never know what the market will do. But this is definitely already a nice overhang that's removed. Now, of course, all of this is great from a stock's perspective, from being listed on the Nasdaq and all of that. That's great. That's also why this was one of the few stocks that were actually quite green on Friday. Now it's up to the company and management to deliver. Like we said, this is the guidance. This is what we should be expecting the company to report on August 5th. These are the improvements that the company is expecting to make this year and of course going forward as well. So they're focused on improving conversion rates, maintaining pricing discipline, and efficiently allocating marketing investments. They're committed to delivering its products as efficiently as possible, fostering a leaner and more agile organization. They're also leveraging agent partnership program for asset-light growth. So they're expanding their agent partnership program. They believe this program will allow them to serve more sellers. They're expected to monetize a greater portion of their funnel, and this aims to leverage their platform to drive more asset-light business, suggesting a model that reduces direct capital expenditures while expanding reach and revenue. Of course, execution here is key. And this is also an important part because, like I said previously, I've seen some numbers out there, especially from Eric on X, who's been very vocal on Opendoor and the fiscal 27 revenue expectations that he saw on Bloomberg. This is the number that I'm seeing for fiscal 27. Nowhere near $12 billion. It sits at $6.7 billion right now. Last time I made a video, you can go check that. I believe it was at $7 billion. So nowhere near $12 billion. So forget about that. Okay, forget about those expectations. Now again, these expectations, these estimates can change. All right. If the macro environment changes, if rates do come down quite drastically, if suddenly you have a lot more movement in the home buying, selling market, then of course these things here will be revised on the upside, hopefully. If we look at EBITDA, this hasn't changed since last time I made a video. The market analysts are still expecting EBITDA to be positive only in fiscal 27. Hopefully they can do this. Opendoor can do this earlier than that. Now, for the upcoming earnings report, what's going to be interesting to see is, well, if they can successfully reduce homes in inventory. As you can see, this thing has been going up and up and up for 2 years now. It's time for this thing to start going back down. Same here with the percentage of homes on the market over 120 days. Yes, that has come down from the highs here of 46% in the December quarter, but 27% is still too high, and that should come down. Of course, as we've known, and as they said, should be expecting revenue to come down a little bit. They're going to be a little bit more profitable, or try to be a little bit more profitable. They're going to try to offload some of the inventory as well. The spreads will be better for them, but it is now very important to make strategic decisions. Don't buy houses just for the sake of buying. Buy in good periods and sell in good periods. Don't go and do things like this where suddenly you have such a high inventory, it keeps rising, and well, the business is not really making any money here. That's not a good business plan. Now, the plan has been made, so that's good. Let's see if they can execute on that. I do also want to hear them say that they're going to have an investor presentation or meeting, right? Because it's been, I think in 22 they had one, and in 2023 they had one as well. 24 nothing, 25 at the moment nothing as well. So it could be a good thing to have something like that for them to actually lay out their plans for the upcoming years. And so right now, stock-wise, as you can see, of course, we peaked here at close to $5, extremely overbought. Then we corrected, we went back down, and it does seem like the stock rebounded just over that 20-day moving average at $1.80, closed out the week at $2.10. Now, what was interesting here is if we zoom out, the stock basically peaked where it peaked back in December of 2023. Same resistance there at $5, although this time it was way more overbought. And of course, right now it does seem like this has gotten a lot more love from retail, but it's not enough, right? It's not enough to move the company up. If we truly believe that this can be a Carvana-like move in the making, then the most important part here, I hope you all understand, is the business actually accelerating and improving, going up and to the right, right? Hopium and saying that, oh, it is 100x or it is the next Carvana just because, that's not a real investment thesis. No, the thesis here is that they're going to become more profitable. They can still grow, but grow in a profitable way. That's how you get your multi-bagger here. That's how Carvana actually recovered and became one of the best performing stocks over the last couple of years. Carvana did not become the best performing stocks. I actually pull it up right here. Carvana, they didn't see this huge increase over the last couple of years just because, oh, wishful thinking, fugazi, it's a wazi, it's a woozy. No, this here happened because fundamentally the business did recover. Of course, here they were basically priced to go bankrupt, let's be honest, and that didn't happen. And so the business did recover, the business did become fundamentally much better. They went into growth mode, profitable growth mode as well. And that's why this stock has gone from around, the bottom here, $1.07 to now $367. They also reported earnings of the last couple of days. Incredible quarter yet again. So all of those things are necessary here for Opendoor to be a big success and a comeback story. Of course, a lot of things can go wrong as well. If they don't execute correctly, then forget about your potential huge multi-bagger. And so all in all, that's it for me in this video. I still hold a position in Opendoor. I did take my initial investment out when it went at $3 and something, so not the peak, but right now I'm letting the rest ride and we'll see what happens. I'll of course cover it next week, whether it's live or in a specific video. So make sure you are subscribed and you hit that notification bell so you get notified whenever we go live with Jose or just a video goes live. Thank you all for watching. I'll see each other in the next one. Bye-bye.